the governor's own words, a rate hike is a no-brainer at this point of time, but the only question then is how much and how fast. Now, half of the respondents to our poll said repo rates could be raised by 25 to 50 basis points. The other half said it will be raised by 50 basis points. So in short, the majority has penciled in a 50 basis points hike from the MPC in the June policy. Now, 80% of the respondents believe that repo rates could be increased by 50 to 100 basis points by August, and that means from 4.4% currently, repo rates are expected to go up to 4.9% by June and 5.15% or higher by August itself. By the end of the financial year, repo rates are seen at 5.5 to 5.75% as per the majority of our respondents. Now, the peak rates in this rate hike cycle, that is expected to be at least 5.75% as per the majority. Some even expect it at 6.25 or 6.5% kind of terminal rates. Now, the Reserve Bank of India had hiked the cash reserve ratio by 50 basis points to 4.5% in the month of May to withdraw some of the excess liquidity. In the June policy, no change is expected in the CRR rate, although it can't completely be ruled out. Now comes the reason for all of this action, and that is inflation, which has been running high for the last 7 months, currently at an 8-year high of almost 7.8%. Now, the majority believe it will be raised from 5.7% for FY23 to anywhere between 6.26 to 6.5%. Inflation, of course, has been high because of the war in Ukraine and the resultant high commodity prices. There has also been an impact on growth, but the majority believe it is unlikely that RBI will tweak the growth forecast. It will be left unchanged at 7.2% for FY23. Lastly, the stance. Inflation remains high and the macroeconomic conditions remain uncertain, and therefore in this environment, a majority believes that RBI will leave its stance unchanged at accommodative, but with a focus on withdrawal of accommodation to maintain inflation rates within the target band while also supporting growth.